The bull market is changing ahead, but what does this mean for your investments? Should you be selling, buying, or doing something else entirely? How can we avoid losing our hand-earned cash and actually turn a profit? Stick around because I'm about to spill the tea on all of this and even more. Hi MemeFi Club, I'm Eva and today we're going to unlock the secrets of bull and bear markets. We'll chat about how to dodge those sticky mistakes during wild market swings and how to tweak your strategy based on what the market doing. Trust me, you'll want to watch this video till the end because I've got 6 killer tips coming your way. Now let's talk about bear market that's just woken up from hibernation. It's funny, right? We've got this 4-year cycle that everyone talks about, but honestly, who really gets how it works? At this moment, we're all hearing about the bull market and its perks, but let's rewind a bit and see how this crypto hype train gets rolling in the first place. Cast your mind back to 2021 and 2022. That's the last time we saw a proper bear market in action. That's like when the crypto party stops and everyone starts heading for the exit. Prices start to nosedive, but what about overall vibe in the market? Pretty gloomy. We're talking about asset prices potentially dropping by 20% or more. Investors start to panic, pulling their funds out left and right, which, spoiler alert, only makes things worse. Here is a real-world example for you. At the start of 2023, right when the bear market was finally calling it quits, we saw crypto prices take a massive hit. We're talking more than half of compared to early 2022. Why? A cocktail of bad news and economic jitters. But here's the kicker. This roller coaster ride is actually kind of predictable. The variables change, sure, but the overall pattern pretty consistent. So what's cooking up these bear markets? Let's break it down into 3 main ingredients. First, a weak economy and steady stream of negative news. Remember 2022? The US economy was doing the limbo and the Federal Reserve was tightening things up. Result? People lost their appetite for risky assets, including our beloved cryptocurrencies. Fast forward to 2023 and news of the US Fed hiking interest rate to fighting inflation put the squeeze on crypto prices again. Second, geopolitical drama. I'm sure you haven't forgotten that nightmare of a pandemic that shook things up in 2020 and 2021. Talk about wild ride! It ranked up the volatility and made people think twice about trusting cryptocurrencies. Third, a slump in trading volume and general cloud of doom and gloom. Take the FTX crypto exchange collapse in 2023. Suddenly, trading volume took a nosedive, and interest in crypto, let's just say it wasn't exactly booming. Liquidity issues and some questionable use of client funds for risky trades were culprits here. And let me tell you, it set off a chain reaction that hit a bunch of related companies and made the crypto crisis even worse. We'll dive into this juicy story later because trust me, the numbers involved are eye-watering, so watch until the end. Remember, though the bear market might feel like a never-ending rainstorm, even after the heaviest downpour, the sun always comes out. In our crypto world, that sunshine is the bull market. Stick around and we'll explore what that means for your crypto journey. Let's talk about the current state of the market, which many are calling a bull run. This trend began around the end of 2023 and is characterized by rising cryptocurrency prices and increased investor confidence. One factor contributing to this trend is the Bitcoin halving event. If you're interested in learning more about that, let me know in the comments and I might make a separate video on the topic. To give you an idea of what a bull market can look like, imagine Bitcoin's price increasing by 40% in just a few days. During these periods, investor optimism tends to be high, and we often see rapid upward market movements as demand to outpace supply. For perspective, in 2020, Bitcoin's value rose from $7,000 to nearly $60,000 within a few months. That's a 757% increase. increase. However, it's important to remember that markets are complex and influenced by various factors. Let's break down 5 key elements that can contribute to the start of a bull market. 1. Celebrity endorsement. In 2021, we saw how influential figures like Elon Musk could impact the market. When Musk tweeted about Dogecoin, its price increased by 14% in just 2 hours, moving from 25 cents to 29 cents. I have a separate video on Musk's influence on the crypto market if you're interested in diving deeper into that topic. 2. Investments by major companies. When large corporations invest in cryptocurrencies, it can boost market confidence. For example, Tesla invested over $2 billion in Bitcoin in nearly 2021. That same year, BlackRock filed a proposal with the US Securities and Exchange Commission to create a Bitcoin-based exchange trade fund (ETF). These moves by industry giants can signal potential to other investors. 3. Positive forecasts and news. Remember October 2020? PayPal dropped a bombshell by announcing support for cryptocurrencies. Suddenly, users could buy, sell, and hold crypto right in their PayPal accounts. They started with the Big Four: Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Fast forward to August 2023, and PayPal's launching its own stablecoin, PayPal USD. This kind of news gets investors excited and often attract newcomers to the crypto scene. 4. Better infrastructure and new platforms. In 2023, investment giant Fidelity jumped into the crypto pool with their Fidelity Crypto platform. It was a game changer, offering an easy-to-use interface and educational resources. These new tools make crypto more accessible, potentially increasing adoption. 5. Cutting-edge tech and partnerships. Layer 2 technologies are like crypto's secret weapon. They are built on top of the main blockchain to boost speed and efficiency without messing with the core infrastructure. The result? Faster and cheaper transactions that make crypto more appealing to both users and investors. Now let's be real for a second. This growth period don't last forever. The crypto world is like roller coaster. Thrilling, but not for the faint of the heart. Even during a bull run, not everyone walks away with a profit. Let's look at a prime example of a bull market: Bitcoin's crazy ride in 2020 to 2021. Picture this. January 2020, Bitcoin's chilling at $7,200. By February, it's up to $10,500. But then, boom! It drops to $3,800. Plot twist, by December it's back to $19,000. Talk about a wild year. So what else kickstarted this bull run? 3 key factors. 1. In 2020, the US dollar's money supply grew up by 22% thanks to COVID-19 stimulus measures. This made Bitcoin look pretty good as a store of value. 2. PayPal's crypto announcement in October 2020. We've covered this, so let's move on. 3. Investment firm Ruffle put 2.5% of its assets into Bitcoin. That's about $740 million. They saw it as a hedge against inflation. Smart move. They sold at market peak in 2021, pocketing a cool $1.1 billion in profit. Bitcoin kept climbing in 2021. By mid-January, it hits $40,700. February, $57,600. March, $61,100. And April, $63,600. 3 key events fueled this rise. February 2021. Tesla buys $1.5 billion worth of Bitcoin. This sent the price soaring to $66,400 by October. September 2021. El Salvador makes Bitcoin legal tender. A world first. The US SEC greenlights Bitcoin-based ETF, making it easier to big investors to join the party. All this culminated in Bitcoin hitting a record $69,000 in November. Alright, crypto enthusiasts, let's talk about the flip side of the coin, the bear market. As the saying goes, what goes up must go down, and the crypto world is not exception. Remember that record-breaking $69,000 Bitcoin price? Well, early 2022 saw Bitcoin stumbling into the red zone repeatedly. The first major crash came with a side of geopolitical drama. Protests in Kazakhstan, the world's second largest Bitcoin mining hub. In just a few weeks, Bitcoin tumbled from $69,000 to $42,000. Ouch. But why the sudden drop? Let's break it down. First, remember those Kazakhstan protests I mentioned? They threw a wrench in the Bitcoin mining operations, spooking the market. Then in January 2022, the US Federal Reserve dropped a bombshell. They were planning to raise interest rates and tighten their belt. This news sent Bitcoin sliding further to $40,000. But the real kicker came in November 2022, the FTX scandal. This wasn't just a stumble, it was a full-on faceplant for the crypto world. FTX, one of the biggest crypto exchanges out there, was accused of some serious funny business. We're talking about fraud, manipulation, and misusing client funds. The founder, Sam Bankman-Fried, and his top dogs were in the hot water for allegedly using customer deposits for risky trades and unauthorized loans. This FTX fiasco didn't just hurt the exchange, it shook the entire crypto market to its core. Investors lost face, triggering a massive sell-off. Bitcoin's price nosedived from around $21,000 to $15,500 in just a month. These examples show how the crypto market can turn on a dime based on economic and political events. It's like a high-stakes game of Jenga. One wrong move and the whole thing can come tumbling down. So the million-dollar question is, how do we play this game? How do we adapt our strategy to this market mood swings? Let's start with the bull market playbook. Here are your top 3 tips. 1. Consider upping your risk game. When prices are on the rise, you might want to add more high-yield assets to your portfolio. But remember, this isn't financial advice. Always do your own homework. 2. Think about active trading. Short-term opportunities can lead to quick profits, but be careful. Too much trading can eat into your gains with transaction costs. And 3. Don't pull your eggs in one basket. Diversify your portfolio across different types of assets. This way, if one asset takes a hit, you're not left high and dry. Now let's flip the script and talk about 3 strategies for bear market. 1. Play it safe. Be ready to move fast when the market changes. You might want to dial back on those high-risk assets during those rocky times. 2. Use the dollar cost averaging method. This fancy term just means invest in small amounts regularly, regardless of what the market's doing. It's like spreading out your risk over time. 3. Keep your cool. Bear markets can cause panic, but if you're in it for the long haul, it's crucial to stay calm. Don't rush to sell everything in a panic. That's often a recipe for regret. By following these tips, you can navigate the choppy waters of price swings and adjust your strategy to match the market's mood. And hey, if you found this helpful, don't forget to smash that subscribe button and turn on notifications. You won't want to miss our next deep dive into the wild world of crypto. Remember guys, the crypto market is like a roller coaster, thrilling but questionable. Always invest responsibly and never more than you can afford to lose. Stay safe out there!